Yeah, let's see if we can get that started. Yeah, if we can't get it started, we'll just kickstart and I'll try to see if I can use the Facebook one. Okay. Okay, yeah, good. We're live on YouTube, so that's fine. I think we can get started. Uh, yeah, there's, there seems to be some conflict. It's interesting. There seems to be some conflict between, yeah, there seems to be some conflict between YouTube Live and Facebook Live, whatever is that is. Yeah, it's probably not going to work. Okay. Good evening, everyone. Welcome to Crypto Pulse Weekly. Tonight, we're back again talking about the events in the crypto markets and what's happening currently and what's happened in the past 1 week. On our crypto drip today, we'll be talking about stable coins and the various implications of stable coins for or against our crypto portfolio. So let's get started without much ado, and let's go into the topics of the day. So in terms of our usual agenda, we'll touch through the market updates, especially as relates to the king of crypto, which is Bitcoin. Then we'll talk about what's happening in terms of technical analysis and fundamental analysis, a brief look at the charts. Then we'll talk about the crypto drip, which is essentially a knowledge transfer session that helps people to understand or make sense of what's happening on the markets. So as usual, let's get cracking on the market updates for today. As we would have observed, Bitcoin seems to have been stuck in range between 60K and 55K over the last 1 week. And in as much as there have been attempts to sell off on the markets, it's been met with very strong buying pressure around the 54,000, 55,000 area. As a result, Bitcoin seems to be ping-ponging between those two price ranges. In technical analysis, you call this a ranging market, meaning the price is not really making any significant move in any direction. It's like going sideways. It sort of has an implication for both the price of Bitcoin itself and altcoins. So on the size of Bitcoin, what happens is if you have an asset that continues to ping pong within a very narrow range of prices, what is going to happen eventually is that the longer the consolidation, as they call it, the larger the breakout. So for the past 6 to 8 weeks now, the price has not really gone beyond 50 and 60K. If it continues like that for another 1 or 2 weeks, whenever the price eventually breaks out, it's going to be very significant, like hugely significant. I'm talking 100%, 150%, or 120%. Now, the reason why that happens is that consolidation is usually a sign that the market is in constant agreement on the price range, meaning both the sellers and the buyers generally agree that that asset is what the value that's been placed on it for that period. So the same way for people that have been on this forum for long, if you remember back in May, June last year, when the price sort of, or middle of last year, when the price sort of got stuck above the $10,000 range, and even when our market dips, the price really didn't go down below 10,000. There was a time it went up to 14,000, then it crashed, and everybody said, "Oh, Bitcoin is going down." Then it just stayed above 10,000 for that period. After that time, it went again back to, I think, like 16,000, and it dropped. When it dropped, people said, "Yeah, it's going to drop to 4,000." It got to 9,800 or something, bounced back to 10,000. And what we saw happen after that was Bitcoin went on to exceed the original all-time high. And we find ourselves in multiples of the all-time high. So from the last all-time high to what we have now is 2x. So what am I saying? 3x. Meaning last all-time high was 20,000, where we've touched 60,000 already. So this means essentially that the consolidation is strengthening the move forward. So when we see this kind of consolidation, any commodity or any asset, especially for an asset with a low supply or a constant supply, it means that the price is going to make a very huge move upward. And that's what's happening. So that's the implication on the Bitcoin side. On the altcoin side, what's happening is that as this price continues to range, the Bitcoin dominance, which I'll show you later on, continues to drop. And as Bitcoin dominance continues to drop, you begin to see that the altcoins are taking on, in terms of market value, that they're taking in a lot of space and they're taking on a lot of value as well. So that's the brief explanation of the ranging markets. And as you will see subsequently, that the markets and dominance of Bitcoin has been reducing over the last 5 to 6 weeks now. In terms of regulation, we do have a number of interesting stories that I saw in the course of the week. One of them was the government of Sri Lanka issuing a warning to the citizens on the imminent risks of crypto investments. And anytime this comes up, I usually go back to say something. The government, wants you to. The government wants you to make money in a particular way. The government wants to tax the money. Then the government wants to determine, how you spend that money and what you use that money for. So the general assumption of the government is that everybody is dumb and everybody does not have the requisite financial literacy. The same way the government of the United Kingdom said in November last year that Bitcoin is an extremely risky asset and that investors should not really be putting their money in Bitcoin. And these are the same people that are secretly at the back end buying up shares in mining companies, Bitcoin mining companies, buying up shares in Bitcoin infrastructure companies. So when you hear this kind of things, it's almost like the government is saying, oh, wait, don't get into the market before us. Let us take position and have control first, then we can tell you what you can do. So really, it's an indication that like the government of Nigeria, the government of Sri Lanka is on the back foot as regards cryptocurrencies, and that's why they're saying such things. In almost like a contrary flip, you have the government of the state of Wyoming in the United States giving an approval for a crypto wagering company. Crypto wagering is like online, is like betting for online games. So what they're saying is they're giving licenses to companies to open online betting in their state. This is the same Wyoming that gave 2 companies crypto collateral licenses last year. They gave 2 banks as well. They gave Kraken and one other company access to open a pure crypto play bank in the state of Wyoming. So they are taking the bull by the horn apparently, and they're not really caring about what's going on in most of the other states. And I remember reading a story about the governor, I think, of Texas, who was making he was alluding to the story of the mayor of Florida. I know I've told you about the story before. I think that was earlier this year or late last year, when the mayor was saying that they were seriously considering it. And after, they took it to like the poll to the community, all the city, majority of the city dwellers in Miami were in favor of, using Bitcoin and cryptocurrencies in the city. So now they're positioning themselves for crypto mining as a town or as a city. They're also saying, you can pay your utilities and all that cryptocurrencies. So because of that, many of the other states, so the guy says he has like calls every week with mayors from all over the country asking him, what's the playbook, how are you guys doing it and all that. So there's a catch up that is happening at the rural or at the grassroots level, even in the United States itself. So when I see this, like, what I see in Sri Lanka, I just laugh because it's a testament to the ineptitude of the people at the helm of affairs. So, but I mean, having said that, overall sentiment is still bullish. It seems neutral now because the price is not going up. But like I explained earlier on, if the price continues to consolidate in a range for a long period of time, and your background context is a bull market, then it means you're going to have an explosive move upward that's going to be significant relative to where you are before. Let me try to explain that in simpler terms. Last year, I said, as I said before, Bitcoin was ranging above 10,000 for a while. And it almost seemed like Bitcoin was never going to, go beyond the all-time high of 19,700 or 800. And it stayed above 10,000 for a while and was ranging between 10,000 and 11,000, 10,000 and 9,500. And it happened that I would say actually between May or thereabouts till June, till October, the price really was between 10,000, 14, 15, and came back. And then when it stayed at 10,000 for a long time and it didn't go below 10,000, the next move up significantly was to break the all-time high, which was 20,000, then go ahead and break another all-time high, which was 30,000, then 40,000. So what's happening now is the price is ranging again, consolidating on the 50,000 and 60,000 level. What it means is whenever the price does move from where we are now, we can expect anywhere in upwards of 80, 100, or 120. Don't quote me, but that's the price behavior, and it's not just for Bitcoin. It's generally how commodities and assets behave. It's a technical behavior of the market. So the overall sentiment, because this is like the last leg, no, not the last leg. This is like the second to the last leg of the bull run. We know that we're still in the bull market, meaning the price will go up. If the price is not going up and the price is staying in range, it means the next leg up is going to be significant. So on the one hand, it means that Bitcoin is going to take a major leap forward in the months to come. On the other hand, for altcoins, it means the altcoins are going to have a field day, which we already can see. Altcoins are having they're already having a field day. And I think I've been mentioning this since March to say that it looks like we're trying to dabble into alt season, but the Bitcoin appreciation has been interfering. But now Bitcoin has stayed sort of cooled down in that 50, 60 range. So I expect that between now, which is essentially the first full week in April, till the end of the week of the 19 to 25, we're going to see some very staggering moves in altcoins. You can quote me on that one, because I think I'm 100% sure that we're going to have very massive moves in altcoins in the next 2 weeks. So that's the overall sentiment for Bitcoin and altcoin from a fundamental point of view. Going into the news items, there's the first one I think catches my fancy, which is Coinbase. Coinbase is like the biggest blue collar exchange. So Coinbase originally used to be like the biggest in terms of pure market capitalization from the 2017s and the 2016, 2018 bull run. And what they've done is they were the first major US company to provide what I'll call on-ramp and off-ramp. So to explain what I mean by on-ramp and off-ramp, on-ramp is what gets you access to the crypto market. Off-ramp is what gets you access from the crypto market into fiat currencies. So they were the ones that were, I would say, successfully able to do that on a large scale and within the US. Most people are able to do that outside the US, but because of the regulatory headwinds that you have within the United States, they were the first major exchange that were able to do that. Then following them, you have people like Gemini, you have people like Kraken. But outside the US, of course, you have massive exchanges that, in fact, you can't even adequately quantify their market capitalization, because a lot of their market capitalization is below the radar. So Coinbase is like the US unicorn for exchanges. So now they've been planning this IPO since last year, by the way. They were supposed to launch earlier in February, then they had some issues, some lawsuit somewhere. Now they're going to launch in a few weeks' time. and they posted their first quarter result, and they had like 1.8 billion profits, which is the highest they've ever had. Thanks to the significant appreciation in the price of Bitcoin and the fact that they are one of the major access to institutional interest. So for most of the institutions within the United States that have interest in Bitcoin or cryptocurrencies, Coinbase was one of their first points of call. So because of that, they've made supernormal profits in the first quarter, and they are set to make, they're set to double their IPO projections at this rate. If these projections hold, it means that whenever they launch, the price is going to go to the roof. And because most companies are a bit wary about direct exposure to Bitcoin, they would rather get exposure to companies that are exposed to Bitcoin. So most people, instead of buying Bitcoin, want to buy shares of MicroStrategy or want to buy shares of other companies that are mining companies or that are Bitcoin, investment companies. What that does is that it provides a regulatory framework for them to protect themselves. The transference of risk is still within the risk framework of the United States financial system. So they're not exposing themselves to new territories, as it were. So because of that, a lot of institutional money will be going into this kind of companies. And that explains why people like MicroStrategy had a better performance even than Bitcoin between Q1 last year and Q1 this year. MicroStrategy outperformed both Bitcoin and NASDAQ, simply because people were looking at Bitcoin appreciating in price, and they were looking at what MicroStrategy was doing, like, okay, these guys are a technology company, quite all right, but they are loading their balance sheet with Bitcoin. So, meaning the valuation was going up. If you followed me since the beginning of this year, at least, you understand my explanation on company valuation and the hurdle rate, meaning how much inflation they have to overcome to become profitable with their cash reserves. What MicroStrategy did was to hedge their position with Bitcoin, meaning regardless of the deflation or not deflation, inflation in the price of or the value of the US currency, which in real terms was like 15 or 16% in the last 1 year because of the money printing and pandemic, they were able to retain value for their shareholders because instead of losing 15% of their cash reserve, they've doubled the value of their cash reserve by putting that money in Bitcoin. Everybody sees that. The investment company sees that. Institutional money sees that. And they know that this is a better play for us as well to keep our money, because what it means is that if you kept your money in MicroStrategy stocks from beginning of last year or end of first quarter to this first quarter of 2021, you have more than doubled the value of your stock. What am I saying? It's like almost times 10 of the value of the stock itself. So because of that, most companies will prefer to expose themselves to companies that have direct exposure to crypto. And that's what's happening. That's what's going to happen for Coinbase, because Coinbase has some degree of pedigree with crypto assets, and they've been known as an exchange for a long time. And as a matter of fact, because of this tendency to lean towards the traditional system, Coinbase is one of the prime targets for people like the what's it called, the tax guys in the US. I understand that they literally bombard them every time to say, we need the list of all your users, both active and non-active, so that they know who they can pursue for for tax purposes. So yeah, because of that, they're going to make a lot of money from the IPO. There is the rumor around that the IPO for Coinbase is going to lift the price of Bitcoin. I don't think so, and I will explain why I don't think so later. In another news, a rather tangential news is the move by HSBC to blacklist MicroStrategy. So for context, I will explain who HSBC is for the purpose of people who are outside the UK or US, and I will explain who MicroStrategy is. HSBC is a bank. MicroStrategy is a technology company. They have enterprise software or analytics software that are in competition with people like Oracle and SAP. So they are a business software company, ideally. But their CEO happens to be a maverick who is in the same category with Elon Musk. And he was the one that started out with this idea of companies putting their balance sheets putting or adding Bitcoins to their balance sheet. And his argument was what I tried to explain earlier on, that if you had 100,000 in the bank as a company, and you kept that 100,000 in the bank between January last year and January this year, the true value of your $100,000 by January this year is $85,000. That's the true purchasing power of your 100,000, because last year alone accounted for the largest amount of dollars ever printed in history, much more than whatever has been printed before up until that time in history. So the devaluation of the dollar at the minimum was at least 15%, meaning that for you to make any profit or any gain on your assets in 2020, it had to have grown more than 50%. So he said the reason he wanted to get into it, or the reason he got into it, was because he sat down and looked at the balance sheet and looked like, what are the forecasts for the next 1 year against the pandemic and the backdrop of the pandemic, and says, you know what, we're not going to make profits on our cash reserves, and there's no instrument on the market that's going to beat the hurdle rate of 15% if we leave our cash reserves within any of the existing financial instruments. And so because of that, he started studying Bitcoin. And now his understanding of Bitcoin, I think, is more than most of people on the market. In fact, most of the billionaires that are investing in Bitcoin, because his thesis is that the same way technology comes to change the face of a market or an ecosystem, that Bitcoin has the potential to change the entire financial ecosystem. Many people agree with him, but few people understand what he's talking about. And because of his move, many companies have started making moves to load their balance sheets with Bitcoins. And now, I think MicroStrategy has done about 3 rounds of debt issuance to raise money to buy Bitcoins, all of which were oversubscribed. And the valuation has gone from, the valuation of the company and the valuation of the man himself has more than doubled in the last 1 year. And they keep buying. Every time there's a price drop in Bitcoin, MicroStrategy will say, okay, we bought this amount of Bitcoin. Right now, they have about 90-something thousand Bitcoins on their balance sheet. So the news comes out this week from HSBC. So if you don't know the history of HSBC, I'll tell you the history of HSBC. HSBC is originally Hong Kong Shanghai Bank, and it had its roots in the in the opium trade in China that was orchestrated by the British Empire. If you ever find that, there's a documentary on, I think, ITV or one of these British stations that no Al Jazeera. It's a documentary on Al Jazeera that actually explains how HSBC came to be. They wanted to infiltrate the Chinese Empire, and they couldn't successfully infiltrate them by war without any unintended consequences. So some British guy came to the king then in England and said, you know what? The guy was selling opium in India. I said, we can sell them opium. So they found a way to start selling them opium by infiltrating China. And then to bank the money, they created the Hong Kong Shanghai Bank, which is the origin of HSBC. That's just the origin of HSBC. But HSBC is a mega bank now. It's one of the biggest financial powerhouses in the UK. And what they're saying is they're moving to block MicroStrategy because MicroStrategy is loading up its balance sheets with Bitcoin. So they sent a message to their bank. In fact, before now, I think in January was when they issued a statement that they're not going to be supporting anybody that wants to transfer money for Bitcoin cryptocurrency. So if you wanted to buy crypto from HSBC, you'll find out that you can't purchase crypto from your bank account. So they said that in January, and now they've come back to label MicroStrategy as. So they've labeled MicroStrategy, the company, they've labeled their stock as virtual currency product and made it impossible for their customers to buy the assets. This tells me 2 things. It tells me that HSBC is not likely to live to survive the next 2 to 3 decades unless something changes drastically. This tells me that this bank is on its way down, because when you see this kind of decision in the face of other things that are happening, so I'll talk about other companies and what other companies are doing and other financial giants are doing at the same time that they are doing this. It tells you that somebody is stuck in their ways and cannot be convinced otherwise. And we have very good, interesting analogies in history, in recent history actually, to to point out where we expect this kind of companies to go to. So you have people like Nokia, BlackBerry. Nokia, for instance, was the king of phones when mobile phones started raining, when GSM started raining in the late 90s and early 2000s. There were no other market competitors. Nokia had the majority market share. They probably had more than Apple right now, and all of a sudden, Nokia disappeared from the face of the earth. So it's what happens when a company gets stuck in its ways and is not able to innovate, or is too big. Let me use that word, to innovate. So keep an eye on HSBC. Hopefully, in another 10 years, it will be stories for business, for masters in business administration students. At the same time, we have people like Visa, Goldman Sachs, and Morgan Stanley taking huge positions in the crypto world, either as payment services provider, custodian services provider, buying up other companies that are involved in crypto, or providing infrastructure. So at the same time that you have people like HSBC going on for lack of better word, going on a tantrum, you have people like Visa saying, you know what, we're going to provide on-ramp and off-ramp into the crypto world, meaning you can buy crypto with your Visa card, you can sell crypto to your Visa card, and you can spend it. And you have Goldman Sachs and Morgan Stanley positioning at various levels in the ecosystem. What this tells me is that while some people are trying to position themselves to evolve into the next phase, some guys are stuck in the past. Only time will tell. Maybe they might be able to redeem themselves in the future. But as of now, it looks to me like somebody is going to go down the drain very fast. Anyways, there was this other news that happened with a Bloomberg? Yeah, it was a Bloomberg analyst over the course of the week that was talking about Bitcoin as a complement to the US dollar, but at a risk to gold. Well, I think it's obvious that since Bitcoin started gaining in October, gold has been slumping at almost at the same rate that Bitcoin has been gaining. Now, Bitcoin has done 1 trillion market cap. It's actually about 1.1 trillion now, which is very close to, what am I saying? It's about, it's 10% of the market cap of gold. So one of the explanations that analysts are given is that we are having this stall in the price of Bitcoin because Bitcoin has now reached 10% of the global market capitalization of gold. And because of that, it's almost like the institutions and the markets are taking that in and saying, oh boy, Bitcoin is now 10% of the market cap of gold, and most likely it will probably increase from there. And if you look at the price, I'll talk about the price later when we get to crypto pulse. If you look at the price action of Bitcoin, it seems to mirror what was happening in 2013. So in 2013, the price took like a 200%, no, not 200%, like 20x move from $200 to like $2,000 for Bitcoin before coming down in the middle of summer and then trying to peak again at the end of 2013 to 2014. In 2017, it was more like a steady rise throughout the year, then a slingshot move to almost 20K before crashing down in January. So what the analysts are saying is that the price action right now seems to mirror what happened in 2013. And if you plot it on the graph, in terms of, what do you call that? Proportion. If you do proportional plotting on the graph, it looks like you might have a 500K. I think you might have 400K, but I think you might have a 500K, because usually what happens is the market might end up closing that period at 400K, but might slingshot beyond 400K to 500K and just touch it and come back, like we have at the last bull run. So that's an important price point to keep in mind. I mean, for people who are part of our WhatsApp group, you already know that we have a roadmap which I shared earlier on, and the fine details of that roadmap we'll discuss in the first few weeks of March in the portfolio review and portfolio management session that will come up in the month of May, rather. Oh, well, it's HSBC will trying to align with FCA regulations. So again, I talked about UK FCA regulations. UK FCA regulations are a bit confused because what they said originally was that you cannot, they will not allow exchanges to create crypto derivatives. Derivatives are specific products that are created by exchanges or by brokers, basically to improve their own profit potential, because derivatives are not, even though they might be tied to the underlying asset by price, they belong to the broker, and the broker has, they have more manipulative power over derivatives. So they said that you cannot trade crypto derivatives, so you cannot offer crypto derivatives to customers in the UK. Now, why that is the message that was sent to the exchanges themselves and the companies. The message that was sent to the media was that, cryptocurrency trading is blocked. So they more or less created a confusion to block people from moving out their money from financial institutions. Think about it. If everybody knew that if you put your money in HSBC, I saw that analysis on somebody's, it was another WhatsApp group that we belong to. And it was sobering. If you put £1,000 in HSBC, your interest over the course of a year is 10p. I repeat, 10p. So if you put £1,000 in a savings account or investment account, you're going to get 10p in interest in 1 year. If that is not daylight robbery, I don't know what to call it. So it means that if you put 100,000 there, you're going to get $10. That's exactly what they're saying. Now, if everybody knows that year on year, Bitcoin is appreciating at least 10%, at least, even in the bear market, year on year, it is gaining 10% in value. Why would anybody want to put their money in the bank? So it does them a disservice, because if you know that, you can keep your money in digital assets and you get better value for your money is not subject to the whims and caprices of inflation, definitely, it's a no-brainer. So the only way to do that is to try to create doubt in the heart of people that, this is not a safe investment, it's highly volatile, it is not based on anything. Like our dear Central Bank Governor of Nigeria was saying that, these digital currencies, it is out of thin air. So you ask them, what is your own currency out of? Is it not out of thin air? People wake up and print money and call it fiscal policy and monetary policy. It's the same thing. The only difference is that in this one, the government doesn't have control, and the government doesn't like to be in that situation. Unfortunately, you can't hold anybody down. Say, you are the creator of Bitcoin, so you are a fraudster. We're going to jail you, which is what has happened in times past to people who have tried to create this kind of peer-to-peer system outside governmental agencies. So HSBC's posturing, whether it's or not trying to align with the FCA, it really doesn't do anything. Morgan Stanley is also here in the United Kingdom. Why is Morgan Stanley not doing what that? Goldman Sachs is also here in the United Kingdom on the way. So it's their own strategic decision. But at the end of the day, when the money starts to move, it becomes obvious where the power lies. When Coinbase started out, of course, nobody gave Coinbase any chance. Many of this on-ramp and off-ramp were not given any chance. And today we're talking about stable coins in crypto. And this point you mentioned is actually very critical, because the origin of stable coins was the fact that traditional institutions were not willing to provide off-ramp or on-ramp to crypto exchanges. That was the origin of stable coins. So, but what has happened now is the crypto establishments have become more powerful and more independent than the traditional establishment. And it's just a matter of time. So at the peak of the last bull run, the overall market cap was around 700, 600, and 750 billion. At the very peak of the last bull run. Right now, we already hit 2 trillion. We have hit 2 trillion twice in the last 2 weeks. 2 trillion overall market cap. So it's a no-brainer where the power is going in terms of what's happening. Well, I'll talk about that. Thank you for that contribution, Ade. I'll talk about that when we get to stable coins and why we have stable coins. This is one of the reasons we have stable coins. In another news, you have Caruso Properties, which Caruso Properties is actually one of the biggest real estate companies in the US, but they're very huge on the West Coast, so Southern California, Northern California, Oregon, New Mexico, Nevada. They have very huge assets there, and they also have very, what you call, high-end real estate development. So now they're following the footpaths of a MicroStrategy. They're putting Bitcoin on their balance sheet, and they're saying, you know what, if you want to pay us in Bitcoin, we'll accept Bitcoin. Let me rush through the other news so that we can get to crypto deep on time. Ethereum hits all-time high. I told you that what was holding back Ethereum last week was that April 1 that people were thinking maybe they were going to get hacked, but it never happened. So Ethereum is gaining on Bitcoin, generally speaking, and that's a good gauge. That's usually a good gauge of the altcoin season. When you look at the Ethereum Bitcoin price, if Ethereum is gaining, most likely we're in altcoin season. If Ethereum is not gaining, then it means that Bitcoin is taking the major space. But right now, Ethereum is gaining. It hits a new all-time high over the course of the, I think that was on Tuesday, 2,150 from the initial 2,000. And it's still sitting above 2,000. So if you look at the chart, it's still sitting above 2,000 currently. Like many people have asked me, you know, what do you think about Ethereum? Yeah, Ethereum is probably still going to do like maybe 2 or 3 or 4 times the current value, and that's because as more institutional money comes in, there are already placeholders for those institutional monies. What do I mean placeholders? Like I explained about 2 weeks ago, we have what you call exchange traded products, and we have exchange traded funds. We already have exchange traded funds for Bitcoin in Canada on the Toronto Stock Exchange that is currently sitting about maybe like 3 billion or so now. And you have many competitors setting up ETFs at the same time with the Toronto Stock Exchange. And I think the ETF for United States will be approved in May 2021, which means there will be more exposure from institutional interest into these Bitcoin products or Bitcoin-derived products. What that means is, as they're demanding for Bitcoin, because they're also products for Ethereum, so you have Ethereum ETFs as well, you have Grayscale Bitcoin Trust, you have Grayscale Ethereum Trust, there will be a lot of demand to buy into those assets. So that's going to drive the price of Ethereum high over the course of the year. The immediate projection is $10,000 Ethereum, but I think $5,000 is more realistic than $10,000. And my reasoning for this year, my reasoning is that we have strong contenders that have their products more or less completely fine-tuned and ready, as opposed to 2017, where there was still most of them were still in the conceptual stage. So you have people like Cardano that have their smart contract solution ready now. You have people like Polkadot that are launching their parachains. So if those launches go well and they also become mainstream, and you have people like Binance, sorry, I forgot that completely. If all those launches go well and people actually get to adopt them on a mainstream level, then that would dilute the market dominance of Ethereum in terms of the smart contract ecosystem. And then that would definitely dilute the market cap, because Ethereum is already doing hundreds of billions in market cap compared to the other guys who are like in tens of billions. So if those other guys gain on Ethereum, then Ethereum might not get to the $10,000 cap. But in the short term, I think Ethereum is always a good buy. But personally, I think Binance is a better buy than Ethereum. Not that Binance is not, and Binance is currently 400, over 400. Just a year ago, Binance was like $40. But because Binance is, it seems more structured to profit higher than Ethereum this bull run. I think maybe next week I'll talk about the smart contract ecosystem and the contenders and why each of them are poised, what I can call their selling points or their competitive advantage against each other. So for Binance, as opposed to Cardano, Ethereum, and Polkadot, Binance has the capability of not only being a smart contract ecosystem token or coin, but also being an exchange token. I think I'll have to explain that in another session. So because of that combined usage, it sort of has more leverage than both Cardano and Polkadot put together, and even the Ethereum, because Ethereum provided like the first opportunity for people to see what was possible in terms of blockchain development. But on the back of Ethereum, every other person has now created their own platform. Some a direct copy, like Binance, providing quote unquote the made in China. But we all understood, we all know what became of made in China. Initially, it was considered inferior till they fine-tune and eventually became the producer for the world. So if you apply the same logic, Binance might actually become the Ethereum of the future. I was just thinking about that this week, and I was like, even though I don't hold Binance as well, but I was thinking, you know what, I might have to sell some of my smaller caps to Binance when the time comes, because it looks like that's the play. And if that play, pans out without them getting into problem with people like the SEC, yeah, I think they'll confidently challenge Ethereum. Ethereum is out of issues with SEC, same with Bitcoin, because there's this perception of decentralization. But Binance, because it's an exchange token, might get into some entanglement. But I like the way they've also sort of separated the Binance US entity from the Binance Global. So the Binance Global is not registered in any of the major countries. So it saves them the regulatory overhead, while they have Binance in each of the countries they're operating in as separate legal entities. So if you have any issue with Binance, you have to deal with. So you have Binance Turkey, you have Binance US, Binance UK will be launched this year, from what I understand. So that saves them from the overhead of regulatory, incursions. Let me use that word. So they might actually be able to gain faster and better than Ethereum. So yeah, for people that are asking me about Ethereum, good to hold. I think Binance is the better token to hold, because money for money, in terms of value, you may get better value for your money over the next 9 months than Ethereum. Moving on, we have the story about Engine. Many people probably don't know Engine, or you're probably hearing about Engine for the first time. Engine is a blockchain platform for gaming and non-fungible tokens. About 4 weeks ago, I talked about non-fungible tokens. But Engine was actually one of the premier blockchain development platforms that provide people, gamers, the opportunity to buy gaming items inside the game with real life, with money, of course, and that gaming item will have value. So they were one of the people that actually came up with the idea of non-fungible tokens. You have to go back to like the video of 3 or 4 weeks ago to understand what non-fungible tokens are, if you don't already know. So what that means is if you are playing Fortnite and you bought a particular armor and that armor costed you money, the Engine blockchain allows you to tokenize that armor, take that armor out of your game and put it in another game. And you can even sell it in a gaming marketplace, because it gives value to what you bought in the game. I mean, this is hitherto not possible. It was not possible. If you bought anything in the game, I mean, I used to be a gamer. I'm still a gamer. Maybe not like before, but I used to play games like Mortal Kombat, adventure games, and all that. You buy a lot of stuff that in-app purchases, and they're only useful for that particular app or that particular game. And you can't do anything with them. Once you pay the gamers, they're taking your money and that's it. This actually provides gamers with the opportunity of tokenizing their purchases, and they can sell it. They can sell it as NFT. So even before the craze of NFT came, this guy had already started working on that platform, and now the platform is getting more and more adoption. So I think they partner with Sony, they partner with 2 other gaming applications. So what we're likely to see in the coming year is games like what's this one that this youngsters play? Fortnite. Games like Fortnite, where they also buy, they buy all sorts of in-game tokens. They're able to tokenize those in-game tokens and sell them. What has actually driven Engine in recent time is because they just launched on Coinbase. And Coinbase, as I said, is like the the good child to the United States government and SEC in crypto. So they also provide most of the US markets the interface or the exposure to cryptocurrency. So if any assets get launched on Coinbase, usually you see a price boost. But before that, Engine has always been on our radar. To give a perspective, Engine was selling at 15 cents at the beginning of last year. So if you bought $100 worth of Engine, right now that $100 should be somewhere in the range of it should be somewhere in the range of 10,000 or about $10,000. That's how fast and how large the price appreciation of Engine is. But it's not even, I don't think it's over yet because it's just coming to mainstream, and the original design for Engine is just being appreciated now. And I see Engine going as high as maybe $30 or $50. Currently, it's doing about $3 plus or $4 already. So I've seen it going far. And I think it's a good blue chip crypto to have. Like somebody asked me about it on the forum, and I said that I don't think, you can sell it, but you're likely to buy it back at a higher price because it's one of those tokens that, just like Chainlink became mainstay for oracles, I think Engine is going to be the mainstay for NFT and gaming in the near term. I just thought it was important to bring that up in case you see, during this DeFi boom, altcoin boom, when they start talking about NFT, and you're wondering why is Engine there. This is the reason why Engine is there. Its current market cap is what's the current market cap? What is Engine? Okay, it's not even there. I thought I had it. Okay, I don't have it. Yeah, it's doubled its current market capitalization, and it's likely to increase more. So now that's the basis of my projection. Now that it's getting listed on Coinbase, what's happening is it's going to have visibility with institutional investors in the US. And whether we like it or not, the US equities market is still one of the biggest in the world, regardless of what anyone might say. So this is Engine is $3.47. Take a look at let's take a look at C. This was January 2018, was 1 cent. Let's even take year to date, which is about January last year. 13 cents. It was 13 cents January last year. There was a time it peaked. That was 15th of March, it peaked like 290. Now it's doing 347. And like I said, the market capitalization is now 2.8 billion. It used to be like 1 billion just a few weeks ago. So a lot of headrooms for Engine in the months to come. And what will likely happen is you'll probably get an Engine Grayscale Trust or an Engine ETF, and that automatically increases demand and increases institutional adoption. So good luck long-term holding coin, if you ask me. I talked about altcoin season. I've been talking about altcoin season just so that we understand what's going to happen or what will be happening. We've already seen some gains. I've seen some 100% gains, some of my tokens already in the last 2 weeks. We expect that there will be some supernormal gains in the next 2 weeks because of the altcoin season. And basically what is happening is because of the consolidation of the price of Bitcoin, like I earlier explained, the price is going to be oscillating until probably end of April, and the dominance will keep going down. I'm going to talk about the dominance shortly under Crypto Vital Signs. So in terms of our market capitalization, I usually make this comparison. So I usually use US equities, but I've updated it. The global equities market is around 90 trillion. Cryptocurrency market is around 2 trillion. This 1.97 is Coin Market Cap's quote, but CoinGecko has a higher value of 2 trillion overall market cap. So we are still in the early stages, generally speaking, because what is likely to happen over the next 10 years is that 25 to 50% of the global markets, equity markets, will be sitting in the crypto markets. Don't quote me, but it's an inevitable trend, because once the markets realize the fallibility of fiat currencies and government bonds. So what I don't have on this screen is global debt market, which are about 250 trillion. Once the markets realize that we're not able to make as much money on equities and on global debts like bonds, then the affinity for crypto will increase. And once it increases, it means that there will be gains, there will be exponential gains year on year for crypto markets. So significant gains in the odds, not significant gains in crypto generally. So we've been dangling between 1.9 and 2.1 trillion overall. In terms of, so I wanted to show the market. So yeah, let me start with market dominance. So I wanted to show the market dominance. So this is what I was talking about before, which is the weekly chart for the Bitcoin market dominance. Right now, we're sitting at 56. By the end of this week, we'll probably be sitting at 55. Usually what happens is once Bitcoin crosses anywhere between 64 and 62 downward, you can assume that you are in alt season, meaning altcoins will start pumping in terms of price appreciation relative to their Bitcoin pairs. The most dramatic altcoin seasons we had was this one at the beginning of 2017, when Bitcoin had peaked in December and was dropping. So what was happening there was people were selling off their altcoins and pumping the money into Bitcoin. And by the end of January, when all the altcoins are pumped like crazy, everybody started buying back their Bitcoin or selling to fiat. So right now we're on that downward trajectory again, where the price of Bitcoin is going down. From what I have here on the technical level, we expect it to get to 54, meaning half of the volume of cash sitting in the cryptocurrency market, almost half, will be in altcoins. That's significant, because considering the fact that the overall market cap at the peak of the last bull run was not up to 1 trillion. So you are saying you're going to have 1 trillion alone sitting in altcoins, and that's likely to increase to 2 trillion in this run. So yeah, this is a good indicator, usually a very good indicator of altcoin season. Secondly, when you look at the price of Bitcoin, the price of Bitcoin on a monthly level has gone up since October till date. So we have 7 months back-to-back increase in the price of Bitcoin. It's scary, because what it means is that there has not been any correction in price, essentially, since October last year. The price has just been going up and up and up and up every single month. It closed higher than it opened. This month, we're only on the 9th day, and we've seen an attempt by the markets to go down, but it didn't succeed in breaking 55. So in my opinion, 55 is likely to be the lowest we're going to see Bitcoin for this month. If we pan to the weekly charts, it tells a different story. It shows that we're a bit overheated on the weekly, and now it's cooling off. So if it stays in this range, cooling off, it means we can have the next 2-3 weeks ranging to the side. And when you have the next 3 weeks ranging to the side, in a bull market, likely you're going to have an offshoot. Then the market starts going up again till it gets to the higher band of its standard deviation. So that's the picture of the price action for Bitcoin. So right now, I think Bitcoin is going to stay in range, because even on the daily charts, so if I go back to daily charts, on the daily chart, you can see it's clearly ranging. It's just been bouncing off 50. This was 43, which was the lowest low we had after we first touched on where is that? Yeah, after we first touched on 60. So once we touched on 60, the lowest low we got to was 50. We did try to break down below that, but it's not been successful. And now we've been sitting above 55, which is what's happened. So I expect that we're going to keep in range for a while. Worst case scenario, last week in April, the market will try to drop to 52 once more. If it does not succeed, then that might bring an end to altcoin season, and then we'll see Bitcoin on its upward climb to new all-time highs. So in terms of our indices, like I always say, when the price of Bitcoin or the overall sentiment of Bitcoin shows neutral or starts to show fear, it's a good time to buy. What I can say though is that last week it was in grid was 74. It's dropped to 70 now. It might drop to like 60 or 50 next week, depending on how the weekend pans out. If that happens, it means there's an opportunity to buy as well. Like I've told you, I mean, backtested this for over a year now. Anytime this gauge goes below 50 or even close to 50, you can't go wrong buying Bitcoin, because it means that from the point that you buy, you're always going to make profits. But we're not trading Bitcoin for the most part now, because we're in alt season. So our focus is on altcoins. Same thing, the sentiments have not changed since last week on the technical level. It's been buy, both intraday and on the daily level. In terms of where we are, usually I tell you everything is in the context of where you are. A strategy is always applied in context. Same thing applies to investments. You need to invest in anything with context. If you don't have context, you've lost meaning for everything. Context is like the purpose of everything, to be honest. So if you don't know the context of what you're investing in, then you're very prone. You're going to be very susceptible to error. The context we're in right now is that we're in a bull run. Where are we in the bull run? I think we're here in Believe. We're close to 3.0, middle of March, but we're back to Believe now. I think we're going to get to 3.0. Altcoins are going to get to 3.0 this month, definitely. For Bitcoin, maybe we're still going to get to 3.0 May, June. We're going to get close to Euphoria sometime during this year. Definitely. I don't know when. It might be middle of summer or might be beginning of fall, autumn, depending on where you are. I'm sure we're going to get to Euphoria. When we get to Euphoria, the price is going to start coming down. There's a Yoruba proverb that says, the one that knows how to fight and how to run away is the warrior in battle. That's my best translation. Meaning, you need to know when to sell, and you need to know when to buy. Otherwise, you'll be like somebody that went to sell bananas or went to sell coconut in the market, and they started using the person's coconut to do circus show. And the person got carried away with the circus show and forgot to sell the coconuts. At the end of the day, the circus clown will return the coconut to him on bots, and he has not sold his coconut. Meanwhile, he's got carried away with the show. So while we're in the bull run, it's important to understand that, even though we love the technology, we do like to make some profits. We'll talk about that later. In terms of knowledge sharing today, our time is fast spent. I'm talking about stablecoins. If I don't finish today, I'll continue next week. So what are stablecoins? Stablecoins are what you call storage of value that are not subject to market fluctuation. That's the way I would just define them. So they're digital assets that have a fixed value. The reason they have a fixed value is to bank the value of other assets. So I will explain to you, if I bought Bitcoin at 20,000 US dollars in December last year, which was the price, and Bitcoin got to 60,000. And at that point in time, I determined that I want to bank my profits. Then I sell it to a stable coins like USDT, also known as Theta. What I've done is that I've banked the value of my gains in a stable coin that is correlated with the US dollar. It then means that I can take that stable coin to another exchange or the same exchange, and I can sell it for fiat. Why did we have stablecoin? We had stablecoin because there was an absence of off-ramp instruments for traders and investors at the early days of crypto. So then, because of the extensive bastardization and villainization of crypto, nobody was willing to touch cryptocurrency exchanges. Nobody was willing to offer them services. So they couldn't service customers who wanted to take off their gains into traditional financial instruments. kudos to guys at Bitfinex, because I think they were the first ones that had the balls to come up with a solution. So the solution they came up with then was what you call shadow banking. I don't want to go into it so much. It's a how do I call it? It's a concept that allows some companies to have banking services without necessarily being a bank. So a shadow banking company will be like, they are close to payment system company, but they are not quite. So what they do is they're able to loan you money that they have collected from another bank. The bank use them as an opportunity to interact with high risk assets or high risk customers without necessarily exposing themselves. So the bearer of the liability and the risk is the shadow bank, but the shadow bank collects the money from the bank, then loans it to the exchange. So that was how they started out. Because there was no off-ramp directly to banks and fiat currencies, exchanges started using shadow company or shadow bank companies, which were companies that had access to banks with cash. So they took the loans from those companies. Those banks took the loans from those companies. So it will be sitting as liability to them. But what they're doing with those cash is they're loaning it directly to the exchanges. So when the exchange has someone that wants to sell into fiat, the exchange buys it from the trader or the investor, then gives them money that's collected from the shadow bank. And then, of course, there's transactional costs both ways. Then there's interest that is charged across. But what then happened was that one of the shadow banks that people like Bitfinex were interacting with created a problem. I can't remember what the issue was, and they were going to get to a liquidity issue. So that was when they started thinking about alternative solution, and one of the alternative solutions was to have a stable coin. Because if you had a stable coin, it means that a trader doesn't necessarily have to lose value on the asset. So if the assets appreciated, they can bank that value and then sell it at a fixed price. So it's almost like creating a futures contract on a digital token, saying this token is going to sell at the rate of a particular asset. So in this case, for Tether, it was the US dollar. Originally, it was backed by the US dollar one-on-one. And then later, they said it was 0.7. But that concept was what brought about stablecoins. And in history, stablecoins have been used to bank profits. But in recent time, it's being used as on-ramp now in recent time. So in terms of evolution, as I was trying to say, it was dollar-backed originally. Later, it moved to asset-backed. Now, you have exchanges creating their own stablecoins because exchanges now have very deep pockets and banks want to be their friend. So the exchanges have the capability to create, to mint their own stablecoin tokens instead of having to use, established tokens like USDT or USDC. So you have Binance US Dollar, which is a stablecoin specific to Binance. What that means is that when you sell off your assets, say you sell off your Ethereum, or you sell off your Binance at a profit, and you want to bank that profit, or maybe you want to bank some of it, you sell it to stablecoins, then that stablecoins give you an equivalent of your currency. For exchanges like crypto.com or applications like crypto.com, they even went as far as creating country-specific stablecoins. So you had for crypto.com, then you had True USD, you had True GBP, you had True Australian dollar. I think you had True Canadian dollar as well. What those stablecoins did was, if you sold your assets to those stablecoins are able to trade one-to-one with fiat currencies. In terms of outlook, I'm not sure whether stablecoins will be so useful in the future. They might be useful for stablecoins that are backed with things like gold or some other things. But in the future, I'm not sure we'll need them, because now we have direct on-ramp and off-ramp with banks. So, for instance, last year with crypto.com, you could buy directly from your card, or you could buy with your bank account, and you could credit your bank accounts. Same thing with Swissborg, same thing with Binance. Most of these exchanges now have access to banks directly, and they can credit your bank account. They might not be able to credit your bank account as themselves, but they have, I will call them shadow banks as well. These payment companies, quote unquote, which are like shadow banks, that are able to credit your account directly because you initiated the payment on an exchange platform. So in the future, I don't think we'll have much need of them. I mean, especially if it's a major cap asset. So if I were to take a look on, let's say, Binance, for instance, Binance, most of the major assets like Ethereum, Bitcoin, Cardano, Litecoin, and even I think Polkadot are able to trade directly with the British pound sterling. You can trade them directly on the exchange, which means I don't need to sell them to stablecoins before selling them to fiat currencies anymore. I can just sell them to fiat currencies and cash out. So in the future, I'm not sure that we'll need them as we do now. But food for thought for everyone. I'm not going to answer that question. Just put out there. Currently, you have, I mean, I can count like 6 or 7 major stable coins off the back of my hands. So you have USDT, you have USDC, you have DAX, you have PAX, you have DAI, you have PAX Gold, quite a number of them that are backed with different things. And for USDT, we know that it's the conglomerate of Bitfinex. What's the name of that? I can't remember the name of they have a parent company. I can't remember the name of that parent company. There's that conglomerate of the company that creates Tether, the exchange, and the parent company. Those are the owners of Tether. And what they say is, if a customer comes and say, we want to gain exposure to crypto and brings $1 billion, they will mint $1 billion USDT and give it to that customer, which means the customer can now take that USDT and get into the crypto market and buy at market price or set limit orders. However, there's been a question I've pondered in my mind for about 2 weeks now. There are 2 current networks that USDT works on. There is one, there is the Tether network, which is ERC20 based on Ethereum. Then there's another that is the Tron network, which is TRC20 based on the Tron network. So the question I was asking one of my friends a few days ago is, who is monitoring the printing that is going on the Tron network? Because by the very nature of blockchain assets or blockchain generally works in a closed loop system. So it's only the computers that are involved in the blockchain that are involved in that blockchain. However, I have USDT. So if I want to move USDT from one exchange to the other, I can choose to use either the Tether network. I can choose to use the Tron network. Now, the Tether network is what everybody knows and what everybody is monitoring. So I was like, wait a minute, who is monitoring what's happening on the Tron network? I'm not going to answer that question, but just a thought out there as to who are the real controllers of the market cycles. I don't think it's the institutions that many would like us to believe, but it's anybody's guess. I'm going to stop. I'm going to stop here for today because I think I've overshot my time by almost 10 minutes. If you have any questions, please feel free to unmute your mic if you're on Zoom, and you can type it in if you're on Instagram, and I'll take your questions. Thank you. Okay, it looks like we don't have any questions for today.
Hello.
Hello. Yeah.
Yeah. Thanks for your time and the education. I really appreciate it. Please, I just want some clarification about some particular token that can be staked on the particular wallet. So I want to clarify point like Atom, and which other coin is that? Iris and that. I want to know: can Atom be staked on a mobile phone, or is it good on a laptop? Because I've been finding it difficult to know where to stake it. So that's just my question.
Okay. Generally speaking, you have what you call hot or cold decentralized wallets. Hot wallets are basically wallets that are one way or the other still connected to the internet. there are various levels of safety in terms of hot wallets. So to break it down, let me see. So cold wallets are usually like devices like Trezor, Safe Power Wallets, Ledger, that are like external devices where you store crypto in, and you take them offline. Except anybody has access to your pass keys, your asset, your crypto is secure. If somebody finds your pass key, regardless of where that device is, the person can move the money. So your pass key is basically the money itself, because if you lose your passphrase even on the external wallets, the money is gone, because whoever has access to the keys has access to the money. Having said that, the decentralized wallets that you can install, so I call them decentralized wallets because they're not sitting on exchanges. The ones you can install on your phone or on the desktop, the phone has an advantage over the desktop because most of the time you have inbuilt authentication mechanisms with the phone, i.e. fingerprint, sign signature, facial recognition, passcode, both at the level of the phone and at the level of the app. So if unless somebody is kidnapped and they're using their face to open their apps, nobody has access to those ones. And if you don't need to access the wallets, the one on the phone frequently, you can actually just log out of that app. Once you log out of the app, for you to restore access to the wallet, you need the passphrase, which is not something that is readily available. So the phone is usually a little more safer than the desktop. The desktop is usually installed as an extension browser. The downside to the extension browser installation is that once you are connected and you've logged into that wallet on the browser, if somebody gains access to your computer, they can actually access that wallet. In fact, there are malwares that can trigger blockchain requests on your wallet and ask for your signature. And if the time is asking for your signature, you are not the one in control of your laptop, they can actually still move the funds. And I mean, this has happened to even very quote and unquote established crypto developers who they issue tokens, and then one of their major wallets that has the founders token just found out that they moved like 1/4 or 25% of their tokens. That's the way many people have been hacked. So for tokens like Cosmos, I think there's a Cosmos wallet for Atom. I stand to be corrected. I think so. There are also other wallets like Trust wallets, quite a large number of wallets actually that you can use. There's Trust wallet, there's MyEther wallet, those are the main ones. There's Coinbase wallet, there's Crypto.com DeFi wallet, there's MetaMask. So quite a number of them that you can install on your phone and then store your passphrase somewhere and get access to your crypto. However, if you're storing your crypto on a wallet, then you need to have if it's an Ethereum-based wallet, you need to have Ether or Ethereum that will allow you to move money in and out of that wallet. If it's like a Binance Chain wallet, you need to have Binance Coin that allows you move money in and out. So that's what I would say. So if you're an iPhone user, you should be able to access Atom Cosmos wallets. I don't use Cosmos, or I don't have Cosmos, but yeah, you should be able to access it on your Apple, what's it called, App Store or Play Store, what's it called, for Google Play Store. Yeah.
Thank you very much.
Yeah. Do we have any other question before we go, so that we close out?
Hello.
Yes.
Yeah, thank you very, very much for the presentation. I'd like to find out, do we need to have a wallet? Because I don't think I have a wallet. I just have the normal crypto app, and that's all I have, all my stuff inside. So do we really need to have a wallet? Maybe I'm not getting something right there.
Well, it depends on, Depends on where it depends on where you are in your crypto journey. I think let me put it that way. So in times
Oh, I
past,
mean,
and I'll tell you why. I'll tell you why this issue of wallet is coming up. So in times past, historically, there have been platforms that have come up as exchanges or as custodial platforms that allow people to store their cryptos on, and have suddenly vanished into thin air with people's money. So that was one of the areas where that saying came that, if it's not your passphrase, it's not your crypto. And because there have been quite a number of incidents like that in times past, people have become wary of keeping their crypto on platforms. But I would say that I think that has changed, especially for major platforms like Binance, like Coinbase, like Kraken, like Gemini, like Crypto.com, that have operations in almost all the continents. And in terms of the company market cap, they have huge company market capitalizations. They already have, huge partnership with payment systems. I think personally, I think at this point, many of those exchanges are actually more secure than you trying to keep your money on your wallets. I might be wrong, but that's my personal opinion. And I mean, I will explain why I think so. If you have a company that is already worth $50 billion or $100 billion, and they have insurance for half the value of their company, you're not likely to lose your money on those kind of exchanges. So I'll give you a good example. In 2018 or 20, it must have been 2018, Binance, the now known Binance platform got hacked. They got hacked for about $40 million. And of course, it was a major thing then that exchanges usually get hacked one way or the other, mostly due to insider jobs. So they got hacked for about $40 million. And within a few weeks, they ensured that everybody got their money back. So none of their customers actually had an exposure, because what they did was they refunded all the money back to the customers and told the customers, calm down, we got this, you have your money back. If your account has been affected, just let us know, we'll sort it out, we'll sort you out. But what they did after that was, because it's the blockchain, you can't take the money anywhere without everybody seeing the trail. So they were successfully able to blacklist all the Bitcoins that were moved. So they knew all the wallets that those Bitcoin went to. They blacklisted those wallets as well on the blockchain. And because everybody sees that data, it's very difficult to move the funds around without people tracking it. So for them, it was very easy for them to recover, because not only were they insured, they were also able to blacklist the actual wallets that those monies were moved into. After that time was KuCoin. KuCoin got hacked last year. When KuCoin got hacked, the initial value was running up to 200 million. By 8 weeks later, they recovered like 95% of the money. Not only did they recover the money, they caught some of the guys. Before even recovering all of the money, they caught some of the guys because they were able to trace the money on the blockchain. So while it's traditionally intuitive to keep your money in a decentralized wallet, because yes, nobody can move the money without your knowledge. Personally, if it's money you're in a short-term investment in, I think it makes sense to keep it on the exchange, because I mean, an exchange like Binance has more liquidity than Coinbase, for instance. If anything happens on Binance today, you're probably going to get your money back within a few weeks, because not only do they have liquidity, they also have insurance packages in various domains that they're working with. So I mean, if it's not your life savings, if it's your life savings and it's in Bitcoin, yes, you can keep it in a decentralized wallet. If it's your retirement plan and it's in Bitcoin, yes, you can keep it in a decentralized wallet. But if it's just short-term investment that you want to cash out this year, I don't think it's worth the stress. Personal opinion, yes, I'm not making a financial advice. Personal opinion is what I would do. Because each time you move the money to and through a decentralized wallet, you need to pay gas fee. If for most of the decentralized wallets are based on Ethereum, so you need to pay Ethereum gas fee, and Ethereum gas fee is not cheap. That's even if you want to use Ethereum.
That's the major issue. That's why I'm really concerned about the charges are so crazy.
There is no point. If you had, for me, at least if you're on the WhatsApp group and you're following me, you understand that I would say that there's no point putting your putting your funds in decentralized wallet when you're thinking of selling in a few months' time. It doesn't make sense. Especially you have people like Binance or Coinbase or even Crypto.com. There's no point worrying yourself. It's not worth the stress of moving into a decentralized wallet and back. As long as you know all your necessary security levels. So what has changed again between the last bull run and this current ones? Companies and exchanges have now gone to extra levels to add like 2-3 layers of security. So you have what you call multi-level authentication. A good example is Binance. I think most other exchanges have it, but Binance is a very good template because Binance would say you need to have your email address, you need to have your phone number, you need to have an authenticator app. And what the authenticator app does is, before you can move funds out, in fact, Binance, on top of the Binance has a whitelist management. So it's actually 4 levels. So on top of that, you can't move money out if the account is not already in your whitelist. And before the account can get to your whitelist, it needs to go through those 3 levels of authentication. So if you have your authentication fully set up, for instance, of Binance, it means that you will need to get a code on your phone in the form of text message. You get another code on your email. Then you get another code from your Google Authenticator before you can add an address to your whitelist. And even while the address is added to your whitelist, before you can move the funds, you will need to go through that process again. So unless you've not set up those security recommendations properly on an exchange like Binance, you're not likely to be prone to any form of theft. Then in terms of the question for liquidity, of course, centralized exchanges are more liquid. They are more liquid than decentralized wallets. Decentralized wallets they're your wallets. It's like saying, is your purse more liquid than the bank? Of course, the bank is more liquid than your purse. The money house. So it goes without saying. The other aspect, if you're taking the DeFi class, is decentralized exchanges that use DEXs. That's another story. It's beyond the scope of our discussion here. But even at that, the cost of transaction is still very high for those exchanges. So in the short term, if it's a token that you're thinking you're going to sell in 3 to 4 months, there's no point taking it away from the exchange. But if it's a long-term investment, and the only long-term investment I consider is Bitcoin, then yes, it might make sense to keep it in the decentralized exchange. That would be my submission. Okay, I think I've done justice to all the questions. Thank you very much.
Oh, no, I have a question. Sorry.
Please come up with your question quickly.
Can I go?
And please, if you have a question, raise up your hand so that I can know before cutting off the call. Go ahead, Albert. Go ahead. I can't hear you, Albert. You're breaking up. Is it my?
Sorry. I just this to take out the crypto. Doc,
I'm not sure whether it's my internet or yours, but I can't hear your complete sentences.
Okay. I think
it's better now. It's better now.
It's better now. Oh, okay. I want a big clarification of this hacking. When they hack the exchanges, do they hack the exchange central wallet, or it is the individual's wallet and the exchange that they hack?
So, okay, I'll answer your question. But it's not as simple as you've asked it. When an exchange is hacked, exchanges have what you call both hot and cold wallets.
Oh, okay.
For an exchange to effectively transfer a cryptocurrency, they have a blockchain wallet on the blockchain of that cryptocurrencies. So I'll give you an example. Binance probably has like 5 or 10 or 20 blockchain addresses on the Bitcoin network. That is why when you send your Bitcoin from blockchain, from Binance to KuCoin, for instance, they're able to send it across, and they're able to send it across successfully. Because what is happening is On the exchange level, so it's like a two-layer thing. At the exchange level, all transactions are happening at the database level. I'm sorry to get too technical, but just imagine a cheeseburger. What is happening, and that's the only explanation that can come to my mind right now. I don't know, for maybe I'm hungry. Imagine a cheeseburger, and you have the meat, you have the cheese, you have the vegetables, and you have the bread. Think about the exchange account like the bread and the cold and hot wallets on the blockchain as the meat. Because what happens is the exchange needs to have a blockchain account for that cryptocurrency for them to render services on behalf of their customers. However, everything that you are doing on the exchange is happening inside a database belonging to the exchange, which is why they call them centralized exchanges, because all the transactions that are happening within the exchange is pretty much happening within their database. So when you go to Binance.com, everything you're doing there is within the Binance.com domain. But when you say you want to transfer funds out of Binance.com to KuCoin, what you are now doing is you are issuing a blockchain request for that particular cryptocurrency. So if it was Bitcoin, Binance will now need to deduct the value of your Bitcoin from your hot wallet, which is on the exchange, then go into their own blockchain wallet, deduct that amount, send it to KuCoin's blockchain wallet. When it gets to KuCoin's blockchain wallet, KuCoin will do the reverse. They will credit your database account with them and take the money into their own blockchain wallet. I hope my explanation is clear enough. Is it?
Yeah, we are getting something.
Yeah, I ordinarily I will be able to draw it. I think I've actually taken this in times past, maybe like June or July last year, as part of the crypto drip, explaining what happens at various layers. You remind me, I'll probably put it in one of the coming weeks.
Okay.
Yeah.
So okay.
Which is why they're susceptible to hack, because it's a centralized server. The reason why you can't hack the blockchain directly is because it's a distributed ledger. It's sitting on thousands of computers at the same time. So you're going to need a lot of computing power to not only keep all those computers online at the same time, but hack them at the same time. It's a no-brainer. It's a worthless effort. That's why most blockchains are not hackable, especially if they're established ones like Bitcoin and Ethereum, because they have too much transactions and too much computer nodes that you need to synchronize to get it done.
Oh, okay.
Yeah.
I understand. So now, saving of crypto on hardware wallets, that's an offline wallet, and saving it on decentralized wallets. This one, which one will you recommend?
Yes, I'm not a financial advisor, so I can't recommend anyone for you, and I don't know what your circumstances are. So it's a bit it's a trick question.
Yeah, or should I say, what are the advantages and disadvantages of using them?
Well, I mean, like I've already tried to explain to the earlier person who was asking about whether they needed to have offline wallets or not. If there are a number of things to consider. Number one, the asset itself. Number two, the maturity of the market, which is what I alluded to originally when I was saying that there had been platforms in times past that have made away with people's funds, and that made people started getting wary of keeping their crypto with online centralized exchanges. But there seems to be some degree of evolution. I think what's going to happen is this: there are going to be custodial companies that will keep crypto on behalf of people. In my mind, there are a number of ways this can play out. Either you just keep the crypto with them, which is already happening with decentralized wallets, like you have with SafePal, Trust Wallet, Mahita Wallet, MetaMask, Binance wallets. You already have decentralized wallets that essentially they're holding the funds for you. Now, the way they make their money is they're creating domains. I don't want to go too technical, but they're creating domains on the blockchain and they're selling, quote and unquote, selling that service to you as a decentralized wallet. So when you open a decentralized wallet with Trust Wallet, for instance, with MetaMask, they assign their address under, they assign you an address under their domain on the blockchain. And when you want to move money, you pay them a transaction fee. So that's where they make money from. So before you move money on the blockchain, you pay them a transaction fee that they are in turn going to pay the miners or the validators as gas. So there's no correct answer. You can store money either way. And if you listen to what I said earlier, that if it's something that's a long-term investment, then it doesn't make sense keeping it on the exchange. Because
that part, I lost you. My network.
Oh, okay. So if it's a long-term investment, there's no point keeping it on the exchange. I mean, if somebody is working on a 10-year or 20-year retirement plan and is using Bitcoin as a retirement plan, then you can as well just bank it in an offline wallet, a decentralized wallet that is only accessible by your phone. Well, the offline wallet is actually the same as a decentralized wallet on your phone, because it just means that the passphrase is where the money is. Anybody that steals the passphrase steals the money. There was a particular notable crypto company MD who had in the US, it happened in 2017. He had is not just his phone, he was hacked on multiple levels. So his email was hacked, his SIM was swapped his phone was swapped. So I don't know if you understand what SIM swap is. They would take your phone number and your SIM and put all that details on another entirely new SIM, meaning he lost access to his phone, he lost access to his email, and then from his iCloud account, they were able to get, and he had, instead of writing out his passkey, he took a photo of it. From his iCloud account, they were able to see the picture of his passphrase, and then they now use that to hack his blockchain account, which was where the decentralized wallet was supposed to be, and they still got the funds. So it would have been a lot difficult for them if the money was on an exchange, because on the exchange, if you had all those things I've listed, the whitelist management, two-factor SMS, email, and Google Authenticator, what's the other authenticator app? That's almost impossible. They will have to steal your phone, steal your email, swap your line, and then add that to the whitelist. It takes quite a number of quite amount of time to do that successfully. So for me, I don't want to bear that risk. If I'm going to bear that risk, then I'll probably just go and buy the offline wallet and go and store it in the safe deposits in the bank. That's the only reason I want to store my crypto in an offline wallet. Because I'm starting an offline wallet to keep in my house. Why? It's like putting on money under your pillow. If somebody walks in and says, "Give me your money or your life," there are pros. Exactly. There are pros and cons, and that's why I said it's very contextual. It depends on where you are as an investor, what your short-term and long-term goals are, what you want to use the investment for. So again, you can't say you want to buy altcoins now that you plan to sell in 2 or 3 months' time, and you're keeping them in decentralized wallet. It's a waste of time. Why not keep them on a centralized exchange that has pedigree like Coinbase, Kraken, Gemini, Binance, or even Crypto.com or KuCoin? They're going to charge you a fraction of the cost. Sorry?
I said, Cranky, I've admired them very much. They have a high level of security.
Yeah, most exchanges, most of the major exchanges do. Even KuCoin that was hacked last year, they've also stepped up their security and all that. So it's I think it's a very individual approach, and it depends on the assets as well.
This time, the centralized exchanges, I think, have become a bit safer, unlike before.
They are the banks of the future. They're going to wipe out all these banks that we have currently. Or well, they might end up being bought by them, depending on how it pans out. But those are the banks of the future.
Yes.
And there'll be many like them that will come up that will offer custodial solutions. I would say, we can keep your crypto for you. And then they will say, we'll keep your crypto for you, we'll give you half of the half passkey, we'll keep the other half. So even if you are compromised, we still have the other half of the passkey, so nobody can move your funds. There'll be services like that in the near term that will help people, so you don't have to worry about remembering or forgetting your passkey.
Yes.
All right, guys. I think
Thank
it's been a
you.
very
Thank you
interesting.
That is very insightful. We are most grateful.
Have a nice weekend, everyone. See you again next week. Till
Thank you
then,
very much.
Thank you,
Doctor.
doctor.
Bye.
Thank
you. Bye.
bye.
Bye. Thank you.
Thank you.
Oh, double.
Who is putting on generator?
So bad. You said bad.
Dr. Ladele, Dr.
Okay. Say,
Emma Sita, welcome. I've done something to my. I've done something to my. So close it anyway. I need to find it. This is funny. Yeah, I should be able to show me the. I'm trying to share. No premium. Ìpàdé di lẹ́yìn ìsìn. Yeah, I think I can post. I don't even end it. This is strange.
Where is my brother? Mr. Wale is not on this call.
Everybody was happy. I come back.
What is Mr. Wale to exit?
Not the exit. Odo kan lọ sí mi. Odo kan lọ sí mi.
Maybe smart. Stop this live stream. It's not. I think I have. I've disabled my settings. I can't see the control, so I'm not even. This is so strange. I'm not able to see the. It's very strange. Anyway, can you still see my screen?
Yes, I can see your screen.
So what happened was I disabled the controls, thinking, or I clicked on it to hide, thinking that I will bring it back up when I want to use it. But now I can't find it, so I'm most likely going to shut down my system now to close this.
Where did you think?
Oh, okay. You can't close you can't end the meeting for all.
Yeah, I can't end the meeting. I can't see any of the buttons.
Yeah.
It's very funny. Anyways.
No result something. No, my system now. No resting.
All right,
Baba. Yeah.
Cheers.
Yeah.